Hey, Doug.
Hey, can
How are
you
you, Bert?
can you hear me?
Yeah, I can hear you. Can you hear me?
I can hear you and see you and all of that. Did you do something on your end?
Yeah, I had to mess with all the settings, I think.
Well, thank you.
Did you get all that snow cleaned up?
Man, let me tell you something. Snow and ice. I was telling Stacy earlier, I had to get out there because every time we get this much snow, about 2 feet just pounds my front door, and if I don't get it, it's a nightmare. So I got the snow blower out and went out there early. Uh, hit it a little bit, had to pull out my snowsuit and all that, so I wouldn't freeze. But I got it to the point where she can get up and down the driveway is all that matters.
Okay.
Cause
Yeah,
she
I
goes,
uh, I had
go
to,
ahead.
I had lottery today, so I was up real early and I fired that thing up at 6 a.m. So hopefully I didn't make any neighbors upset. But
Oh no, let me tell you, it seemed like everybody was trying to chill, like to see if any more was coming. And I'm like, I can't mess around with that because you only get about an hour and a half of it melting, and then it just starts to freeze again.
right,
And I just felt so sorry for some of them out there with those little small shovels.
right,
I mean, like I wanted to go over and put the snow blower, but I went over it twice, so I was out there a good 45 minute hour, starting around 6:30. And so it was one of those things I had to get it done because if we get another 3 inches on Thursday, that's gonna be tough.
I think this is being recorded, Doug, too.
Is it? Okay. I saw the live and the record button, so has this been actually released to the public?
Um, that's a good question. I can look real quick. I
I
would
mean,
imagine.
I know we've got the authentic sign offs and all that, the paper's name on it. I mean, I know it's deemed to the public because it's gone to the clerk of the bureau, but I don't know if they physically received their copy yet.
Yeah, it looks like it was released on 128.
Okay.
Yeah, we beat last year. It was on 3/3/2020 last year, so we got it out earlier. Even with COVID, this is the earliest been out in a few years, actually.
When's the last time they actually done the CAFR? Or is this their second go round or your third probably?
I bet you this was the second year no CAFR, so that would make it 18. I bet you. I just pulled it up. Actually, no. Was 17 the last year?
That might be right.
It might be 17, actually. Yeah, it looked like 17, actually.
Yeah, because I know they waived it last year, right? And then we physically went in there because it was a cold night like tonight. Last time we physically done the post audit.
Yeah, I remember that. You and I were there.
Yeah, so I think that's when they start discussing probably not doing a CAFR moving forward in that fiscal 17 post audit 18 fiscal year. So
What's up, Doug?
my
Happy
main
New Year,
man,
man. What's up, man?
how you doing, Brian?
Oh man, staying out the way. How about yourself?
Hey, I gotta stay out of the way, my brother. Wearing that hat, ain't you?
Oh yeah, man.
How's things going, man? Staying busy?
Oh yeah, just locked up. Staying inside.
Yeah.
Had a good snow shovel day today. That was a lot of work, man.
Oh, all of us.
Yeah.
All of us. And I gotta find me one of these little young kids around here that want to make some money.
Man,
Although
nah,
I got a snowblower, I'll pay them to do it all if they do it right.
I don't think those kids exist anymore, Doug.
Yeah,
They,
you can't pay them. You can't match minimum wage, man. You know what I mean?
hey, Stevie, you're right. But a few years ago, it was one of the funniest things. But this little guy was so professional. They couldn't have been no more than 10. And he's knocking on the door and he's like, "Sir, we will take care of this and do this." And I was like, "Really?" He said, "Yeah." He said, "We can get started right now." And I said, "Okay." So his presentation was so good. I told him to go ahead and get started. And he had his two little boys with him. They were both about 10, 11. And they got started on the sidewalk. And then he was up there talking to me. He said, "We also do landscaping in the summer." I said, "Really?" He said, "Yeah, we can be your one stop. Just hand us a little card." And I was so impressed. I mean, of all the years I've lived out here and people knocked on the door, this little guy had a business savviness to him, and my driveway had never been shoveled that good ever. I mean, because me, I get it, but I'm not going back over those streams and things like that. But this little guy, he was pretty good. I was so impressed. So when's that? When are y'all gonna break ground, Brian, on the new high school?
You said what?
When are you gonna break ground? Physically break ground on?
We're going through the process of getting the architects and everybody lined up and stuff. So we got a little ways, a little planning and everything else. So.
Okay, and you're gonna build it. Is it going to be called a new school, new athletics, and all that, or?
I mean, I think they're gonna have like a little field house and some other things, you know, amenities, but like I said, right now, we're just in the planning phase. I guess they're going to work on the financing and stuff tomorrow, just trying to get the bonds and cops and stuff issued and so forth. So.
Okay. That elementary is turning out very nice.
You still what?
That brand new elementary that's
Yeah.
gonna open.
Yeah.
I've literally watched them build that because that's where I go on my walks.
Mhm.
And I didn't know initially where they were going to build it. That big soccer field, and then I saw them pouring, and I'm like, this is going to turn out really nice.
Right. How many years you got in, man?
Hey, just like I tell the staff, I don't even think about it because if I think about it, I'll be sending in my papers.
No, it's because you lost count.
Yeah, well, yeah, and I'm not trying to remember.
Hey, Doug used to walk me to kindergarten. He was working for the auditor's office.
Well, I had to because you needed it.
And put it this way, I'm retired 5 years or 6 years in. So
Really?
yeah. 2015.
Wow. I remember when you and Smitty walked through the door.
Yeah, I told you he used to walk me to kindergarten. You know, that's all right, man. They're gonna name a piece of one of the rocks in the building after you.
No. They gotta do better than that. They're gonna put the statue.
They're gonna just put one. They're gonna have one of the bricks.
One brick.
Yeah.
Hey, Doug, are you far away from your computer? Your audio is a little fuzzy.
I am about a foot in front of the computer.
Okay.
Does that sound a little better?
No, about the same. I mean, I can hear you. I just didn't know if it was.
He still has that dial-up internet and stuff, man. Hey, I've known Doug for so long, so I can tease him.
Can you hear me pretty good, Brian?
Yeah, I can tease you like that.
Oh, absolutely. No, because I've had some issues on past Zooms with the volume and stuff, so I had to check in a little early to make sure somebody could hear me. There he is. How you doing, Steve?
Are you just now seeing?
Burl, how you doing? Hey,
Doug, how are you?
how are you doing, young lady?
I am just fine, not feeling quite that young, but I'm good. How are you?
Well, you're certainly looking it, so I just had to put it out there.
Hello.
Hello, girl.
How you doing?
Hey, you know, I certainly miss you guys in the live aspect, but this will certainly work also.
Good.
Steve, how you doing, sir?
I was on mute. Good, Doug. How are you doing?
I'm doing pretty good.
Good. Hi, Steve.
Hey, how are you?
Good, good.
Hi, Steve. I didn't mean to miss you over there.
Hi, how are you?
Where's our man, Brian?
There he is. He's right there.
There he is.
Was Jennifer joining us tonight, or?
I
No.
don't think she usually has council meetings for work on finance committee nights.
So it looks like, and you know, everybody's here.
Yeah.
So
Everybody's here? Everybody's ready to go?
Yeah, so,
Okay.
I just want to welcome everybody to February 16th Finance Facilities Meeting. Board members present, Matt Campbell, Daphne Morning, Burrow Piglantonio, and myself, Brian Hairston. The first item on the agenda will be the actual post-audit conference. We have Doug Ferguson and Steve, I'm not sure what your last name is.
Steve Call.
If call.
Okay. So, we're going to give you the floor and, I guess get at it.
Well, thank you, Brian. And again, it's always good to put faces and places. And I certainly miss you guys in terms of having the live presentation, but we're all dealing with what we have to deal with on a daily basis. But I understand we have about a half an hour, so I'm going to get right into this. I don't think it's anything we will be surprised with or anything we haven't done in the past. But if anyone has any questions at all, any comments, concerns, anything that we're going to touch on, just stop Steve or I, and we'll certainly try to address that. We're going to start with the actual exit conference agenda. If you can go to that, and on that agenda to the left, it kind of breaks down from our chief down to our assistant chiefs, and kind of makes up part of the staff that collectively put together from head to toe that got this done. Really, the scope paragraph there tells you a little bit about our office, nothing real new. Confidentiality, system report has been released, and you'll notice within the context of our report, it does have Auditor Faber's signature. And Stevie just verified the report has been released. So this is public information. If it hadn't been released, and we had discussed that, that's what the confidentiality under revised code 121.22D exempts us from that. So this isn't subject to that, and we certainly wanted to get this out. We're going to start with our audit scope and our letters. So if you can keep that agenda right in front of you in some kind of way, get over to your independent auditor report. And that's basically our opinion. And we'll talk about the GAGAS letter and the uniform guidance letter as we go through this process. But basically starting on page 1 there, independent auditor's report is our report on the financial statements based on the financial statements that we audited. Identifying your major funds, your other remaining fund activities, and things of that nature. Explains the management's responsibility, and it explains our responsibility as it relates to the financial statements. And we believe, very last sentence there on the first page, we believe our audit evidence supports our opinion. Page 2 there real quick. In our opinion, your financial statements present fairly in all material aspects, which basically means that you have an unmodified opinion, which is the highest level of opinion that we can issue, which you've had in the past, and then it tells you the respective financial statements that we're rendering our opinion over. This year, a little bit different is our emphasis of a matter, which if you have your report or if you have any questions on our note 21, we do have an emphasis of a matter just because of the COVID-19. And our office kind of came up with that plan because some districts or entities are affected based on what's going on out here. And so it really didn't have any effect on your financial statements. But at the same time, we thought for the reader can go to that note and see exactly what effect it had, if any, which it did not. So that looks a little bit different. That's pretty much customary in every school district that we've issued. Matter of fact, Stevie, all audits that we've issued pretty much, even some of our small ones, has referred to the emphasis of a matter, I believe. Real quick, the other matters is just the other required supplemental information that's in your financial report. And basically the last sentence there, we do not opine on that other information, even though we audit it like we do. The standards does not require for us to opine over that information. And we haven't this year, or we haven't in the past. And then even some of the other supplemental and other information that the opinion refers to, Second paragraph there, referring to the federal schedule. If you're taking notes, page 89 is going to be the page that references to your federal schedule, which is your federal expenditures that we audited as part of our single audit, our uniform guidance letter that we'll talk about in a minute. And basically the last sentence of the last paragraph on page 2, we basically say, in our opinion, that financial statement, which is your federal schedule, is also not materially misstated as it relates to the accounting piece. Now, I will refer to issuing opinions several times, but I don't want you to get confused. Right now, we're just talking about the financial accuracy of the federal schedule. Okay, so when I talk about opining on the compliance and things of that nature, I will refer to it at that time. Any questions, comments, concerns over the opinion? Pretty straightforward what you received in the past. On page 3, real quick, it's just the other reporting requirements is just a reference to the GAGAS letter during accepted governmental auditing standards. And we won't spend a lot of time discussing that because we're going to go to the GAGAS letter now. Page 91, and I don't know if you have it right there in front of you. You have to go through a lot of information to get there, but we're on page 91, and that's our compliance, financial reporting and compliance letter that's required by the standards. Again, nothing different than in the past. The scope paragraph there refers to what we audited in accordance with in the financial statements, and it's addressed to the Board of Education. In terms of the internal controls over the financial reporting, again, if you're taking notes, statement on auditing standard 55 is kind of the godfather over the nature of what we do there. But at the same time, under internal control over financial reporting, we do not express an opinion over the effectiveness of the internal controls. Our responsibility is to gain an understanding for our testing. And I know a lot of us are familiar with Sarbanes-Oxley back in the early 2000s. They issue opinions over the actual internal control effectiveness. Again, I'd like to emphasize that to the board so you'll know exactly what we're doing and what our responsibilities are. The rest of this paragraph is really in relationship to Statement on Auditing Standard 115, which talks about our responsibility for identifying any material or significant deficiencies as it relates to the testing that we came up with. And basically, over internal controls for financial reporting, we did not have anything that rose to that level. Stevie will go over our management letter that we have that's a little lower in terms of financial reporting and things of that nature. But in terms of the GAGAS, we don't have anything there. But we do explain what a deficiency and what a material weakness may be. So any questions over that at all? Page 92 gets into our compliance and other matters, which is, again, if you're taking notes, nothing more than our Ohio compliance supplement. And again, I reference to the board. This isn't I got you, you didn't know, or you weren't aware. Our Ohio compliance supplement is right on our website. You can go to it, you can look under school districts, and it will tell you everything that we're testing, whether it's direct, indirect. You can probably even identify our audit procedure. So that's just kind of an FYI in terms of the Ohio compliance. And the main thing there is at the bottom of that paragraph, our test disclosed no instances of non-compliance that we have to bring to your attention. The purpose of the report, again, is to not opine on the effectiveness of the district internal control and compliance, but just to bring to your attention items that we may have ran across while we were doing our due diligence and obtaining the understanding and testing those respective items. Okay. Any questions, comments, concerns at all on the GAGAS letter? We're going to keep moving to the uniform guidance. letter. And if you're taking notes, this is your letter over your federal awards. This is the letter that's issued that tells you whether or not you're complying and doing some of the things in relationship to the federal dollars. And I'll kind of break it down for you. You actually had one report in the scope paragraph talks about what we audit in compliance with. To make sure you understand that, you can look that up. Management's responsibility. One thing I like about the federal government, they come out and tell you whose responsibility those schedules are. The gag is kind of loose to it, but the federal government tells you what management is responsible for, and then it tells us what we're responsible for as auditors, and we're responsible for opining. And again, when issuing an opinion, we don't issue an opinion over the effectiveness of the internal controls, but what we do is we issue an opinion saying that we have tested enough to determine that a material compliance has not occurred for the respective grant that we audited, which is our special education grant. Okay, he goes to tells you about Title II U.S. Code of Federal Regulations is what we have to audit in accordance with. And then at the end, we certainly believe that our audit provides a reasonable basis for compliance opinion over the district major program. However, our audit does not provide a legal determination of the district's compliance. Page 94 there, the next one, opinion over a major federal program. We basically, which I basically summarized, it's right there. The report on the internal accounting controls, again, is very similar to the GAGAS letter. It tells you what our responsibilities are in terms of internal controls. Now, if you're taking notes and future auditors, if Stevie and I aren't around for whatever reason, auditors are responsible for getting to a low level of assurance for internal control. So in other words, we have to test your internal controls over your federal compliance. We do not have to test your internal controls over financial internal controls, if that makes sense. So the feds wants us to take a look at the internal controls as part of issuing our opinion, even though we don't issue an opinion over the effectiveness of the controls, if that all makes sense. Okay. Again, they allude to us not opining over the internal controls. Second to the last paragraph, which I think is interesting, about halfway down. We, in essence, did not identify any deficiencies in the internal control over compliance that we consider to be material weakness. Then it gives you kind of a catch-22. However, material weakness may exist that have not been identified. Now, it seems like we're covering ourselves, and I really think the standards are probably covering themselves, and that's why that's in the letter. But why it's there is because there is certainly other things that could be going on that wasn't brought to our attention. We were only required, in essence, to test one major program, and I will get to that here shortly. Page 95, on the schedule of findings, and if you are summarizing with other constituents, other board members, or residents, and they ask you about the audit report, this is the page that you can go to summarize. It's basically going to summarize everything that we discussed in our post-audit, starting with the type of financial statements and opinion we allude to have been unmodified. The next three items there refer to the GAGAS letter, and that's not having any reportable conditions or material weaknesses that needed to be reported. The next three items there refers to the same thing, other than just the federal major grant. We didn't have any significant deficiencies. We had an unmodified opinion over the compliance, again, which we discussed. And we had no other reportable findings under 2 CFR 200 there. Now, if you're asking which was our major grant, it was the special education cluster, and it was and you were deemed a low-risk client under our CFR. But I want to touch bases on that federal schedule just real quick so you'll understand exactly what we're doing when we're auditing your federal schedule. Can you, everyone turn to page 89 if you have that available?
They do not have the detailed report. What I had forwarded the board was the opinion, and then
Okay,
in the three findings
okay,
that were two management letter and a verbal comment. That were,
okay. Well, I'll summarize it for you. So when you kind of take a look at it, at the end of the day, this is your federal expenditure report. And you had about 4.6 million of total federal expenditures that we evaluated. Of that, and the reason why I like to bring this to your attention is under the U.S. Department of Education, passed through the Ohio Department of Education, your special education cluster, which made up about $2,067,000 in total, which is made up of CFR number 84-027 and 84-173, which is your item that was material, your only grant that was material. Now, when you think about what we do in relationship to the other information that you'll see, we evaluate it. And under the GAGAS report, let's say we would have saw something in your child cluster or your cash assistance or your Title I while testing our special education, then we would have reported that under the other matters in the GAGAS letter. That very seldom happens, but in my experience, I've probably seen everything that you can see. It has happened before, but most of the time it's something that we get turned on to through a outside person or persons. So that's what we're opining on. In our opinion that I alluded to earlier, the accuracy of the federal expenditures, and then we're opining over the compliance that we tested for special education cluster. Okay, and we certainly apologize that you don't have that, but I like to touch bases on that so you'll know exactly what we're on. Someone asks you a question, well, you know, we understand this is going on in Title I or English language or whatever the grant may be. The first thing you want to find out is what did we actually test and what we were actually required to test. Okay. I've been around over 30 years, and I remember Brian and I back in the day, well, we done 100% testing. And obviously that got a little costly and we didn't have to do all that to meet the standards, so we moved on. So any questions, comments, concern over the opinion, the GAGAS letter, the uniform guidance letter, or the federal schedule? So we got about 10 minutes or so. Part of what you probably don't have either is the notes to this federal schedule. And I'll just touch bases on them. It's the supplemental notes that supports the federal schedule. It gives you your basis of your presentation, gives you a summary of your accounting policy. For example, your federal schedule was prepared on a cash basis of accounting, just like our checkbook. Receipts coming in, the expenditures going out. One of the things that has changed over the years, the feds now do not require you to report your actual revenues on the schedule. The district makes the determination that they only wanted to reflect the expenditures, so that's what we audit. If you were to opt to put the revenues on there, we would audit that in accordance with the standards also. Okay. Questions, comments, concerns? Stephen, you want to take the management letter?
Yeah, absolutely. We did have two management letter comments this year. One stemmed from our testing of the special education cluster, and it involved expenditures that paid for student workers. And we actually did get, we got with ODE on that one, and they came back on that consultation and said that those were not allowable. So we did cite that. I believe it was about $7,000 in expenditures that we found. And the second comment was a recommendation over accurate financial reporting. And it was on the budget versus actual statement, where we noted that the final revenues, property taxes, were actually understated by the pilot amount. And that amounted to about 6.8 million. And while that amount is a material amount to the statements, we did not deem it a material weakness or significant deficiency, due to that being the only issue that we found with the statement. So while it is a large material dollar amount, we did not feel that it was an internal control weakness on the district's behalf. Those were the two issues we found. I don't know if Mike, if you want to jump in at all on those.
Sure. We can discuss them. The student worker issue, I mean, it's something that has been occurring for, I assume, a number of years, because the student workers have always been part of that program passed. So now that we're aware that that is no longer an acceptable practice, we have since removed that expenditure from the cost in the program going forward. So they'll be moved back to the general fund. The budget versus actual, that relates to the actual numbers. There was no issue relative to actuals reported, but the budget was not updated to reflect the final revenue estimates provided to the county auditor. And that was a miscommunication on my part with, and my responsibility with Michelle, since there are programs that you can run within state software that allow you to balance all accounts to budget and actual activity. I've never been a fan of using those because I feel that variances are something that should be shown and explained. So I basically instructed her not to set the balances to, for them. And that caused this particular discrepancy.
Like, this is something that we've been trying to nail down, right? Because these pilots happen in Columbus, City of Columbus, City of Gahanna, Jefferson, Mifflin, and we don't get, we would love to have a listing of all of the pilots and sources that we.
I do have that today. I mean, I do have summaries that go back 2 years that show the detail of what's come in by.
You created that.
And I created that. And I now use that as my basis to do estimates on what the revenue is going to be. Now, certainly that will change as new things come up and or tax settlements occur, because tax settlements are also part of that, where we negotiate with a firm to change their valuation. To the extent that they've been increased, we have additional payments come in, and we did have one just this past month for a couple $100,000. So that's an ongoing process and analysis that occurs. But I do have a summary that I can share with you.
So I feel that Mike has finally really kind of got this identified. It was for the last, this is my 5th year on the board. The variance from projected to actual has always been, in my opinion, unacceptable, but we didn't have good information to be able to nail it down closer. So hopefully this will become a non-issue in future years.
And this would have been avoided had I, had Michelle adjust the numbers in the budget columns. So what happens is, the numbers that are in the system get extracted by the accounting firm that compiles our financial statements. Since budget numbers had not been updated to reflect the latest amount of the estimates, that what they used showed a larger variance than it actually was. So it was an error in reporting on the statements as opposed to an actual error in any reporting of actual results.
Well, Mike, very good point. At the end of the day, us as auditors, we're looking at the actual source documentation and actually the county itself and their estimates that they send you on any supplements or things of that next nature. Sometimes it's a lot difficult to break down and gather. One of the things I always recommend is if I was sitting in you guys' places, and obviously I'm not trying to make a lot more work for Mike, is that, you know, each and every fund is going to have an estimate, appropriations, and things of that nature. But at the end of the day, what we're going to look at is the source that reflects that. So so as we look at the actual documentation, like Mike alluded to, you could certainly have the correct information, but if it's not reported financially on the Hinkle system, then that's what we audit. So you could in-house technically have that information, but if it's not presented. Now, again, you don't do a CAFR, and that's okay. One of the things a CAFR does present is each and every fund has its own budgetary breakdown. And you can go to that CAFR and break down budget to actual, appropriations to expenditure for each respective fund. Now, because you don't reflect on that, it's kind of up to the board and Mike for you guys to get together and say, this is what's acceptable to us. So once we get to year end, at the end of the day, you know you're in compliance with the Ohio Revised Code, and then you as a board feel comfortable with what's been presented to you at board meetings. Okay. Thank you, Mike. Stevie, you have anything else on that?
No, that is it for the management letter.
Any questions on the management letter?
Yeah, I just had a question too. When you're talking about like the how it's reported as far as the understatement and so forth, whatever cases, what is the auditor, or how is it perceived by the public? I know that usually when you're rendering an opinion, because you have users that are having reliance on the statements that are made within the financials. So I'm saying where there's no corrective action, there's nothing, it's just noted, or I mean, it's just noted that this was, we saw this and nothing else, or?
Yeah, well, first of all, your management letter does not go to the public. It's not, once it's released, it's sort of an internal document that we have, and obviously I recommend in all of my years of doing this, and obviously my group does Franklin County and some of the other larger school districts and have for a number of years. I always recommend for anything, even verbals to the board, to have the appropriate actions that you feel you need to take to correct, just in case someone does ask, well, what are you doing about that? We understand that you had a management letter. It wasn't released to the public, although we know it's public information. And at that time, you can say, yeah, that's certainly what took place, and this is what we're doing to fix it. It's sort of like that initial internal control measure that you're doing if it was an internal control weakness on anything else. That's the first steps you're going to do, is have that corrective action program. It's just something I'm geared with in terms of sharing it. It doesn't mean you have to do it, but certainly we all get certain inquiries from the public, and to me, it's good to have. Not only for this, for any other verbal or anything else that you may have. But to further answer your question, Brian, it's not required. The standards doesn't require you to put it in writing. It doesn't require you to do anything else with it. It's just a kind of an internal control preparation items that we should share with you in terms of the whole picture. Okay. In closing, kind of, if we go back to that agenda in the exit conference agenda, the last thing that we're going to talk about is our required communications, which is AU section 260, really at the bottom of page 3 of the agenda. We kind of talk about our contract that was signed in the engagement letter, September 14, 2020. And that's important in our communicating the statements communication that we have that in contract. That's why that date is there. Then also in terms of a formal or informal interest conference, we certainly like to make sure that required communication is there for the board. And turning the page 4, counting policies, we document the policies that was in place and effective for as of June 30th, 2020. And we mentioned whether or not it had any effect on your district. In this case, it did not. Estimates are always going to come from GASB 6875. Those numbers are always estimates and will continue to be estimates. When we brought on all of that liability a few years ago because the GASB required the state of Ohio to comply in order for CAFRs and things of that nature to be rendered accordingly, 68 and 75 are always going to be estimates used. So we bring that to your attention. Financial statement disclosure, the contingency footnote discusses pending litigation. That's pretty much common. Obviously, it was nothing that affected your financial statements. Difficulties, we didn't have any difficulties on our side. The uncorrected misstatements were some of the things, one of the things that Stevie kind of went over with a few minutes ago. No disagreements on our side. Ray and Associate compiled your financial statements for fiscal year 20. And then we had no other significant issues requiring correspondence with management. Independent, we were independent in doing our due diligence and performing the audit. Management representations is that what we refer to as your rep letter that you signed and returned to Stevie in order for us to issue your opinion. And then the responsibility and other information enclosed in the audited statement is communicated in our independent audit report. And then it goes on to tell you a little bit about GAGAs, which I've kind of touched on, and it talks about the release of report and things of that nature, which we're already in the process of doing. Okay. So with that, that's pretty much all Stevie and I had. Am I missing anything, Stephen?
No, I just wanted to thank Mike, to him and his staff, for getting us everything we needed in a timely fashion. So you guys were able to meet your bond requirement to get that submitted. And side note, I don't have the exact amount, but we did come under budget that we did present in your initial letter of arrangement. I did not have the exact dollar figure, but we did come under budget. And also this year as well, even with the pandemic, it's the earliest your audit's been released in the past 3 fiscal years. So that worked out well this year. And it was released, we didn't say the exact date, but it was released to the public on January 28th is when it was released.
And keep it in mind.
And I do want to thank Steve and his staff, for helping us because, getting that released and working with him to help expedite that. It normally would have taken maybe a little bit longer, but because of our bond issue and needing the report and our financial statements, that was very helpful. We're actually selling bonds tomorrow. I'll be covering that later in the meeting with the board, and we're looking forward to a very successful sale.
And I would just like to add on that, part of that entrance conference that we offer or discuss or whatever, anything like that, Mike, that you're aware of that can affect when you want your report released, even prior to that. If you find out in March or May of the current year of early releases, although you may not be doing a CAFR, certainly let Stevie know. At the time that you share that with him is the time that we start as a staff, Team Ferg, starting to roll all of that information together in our plan. And so if we got to move some things around to help you meet that schedule, as long as we know up front, we can make that accommodations, and then we can make it easier on your staff and easier on our staff. But we certainly will meet that deadline if information is provided to us. So I had something else I want. Oh yeah, I just wanted to congratulate. I was talking to Brian a little bit earlier. Obviously, I'm a Gahanna resident, and I wanted to congratulate the board on the passing of the levy and things of that nature. And I know it's tough and everything you're going through with the financing and things of that nature, but I thought I would offer my congratulations for that.
Thank you to you and Doug, Doug and Steve and your team for getting all that done. You know, we're converting to the newer system, so you can say a prayer for all that to happen smoothly, right? In the next couple months.
I haven't seen one yet that went totally smooth. So you just have to get in line and roll with the punches. I think the city itself is going through some little hiccups in terms of their new systems also. So, and that's our client too. So certainly we'll understand. And at the same time, if it causes any delays, our responsibility in terms of that is just what's going to affect the actual outcome of the financial statement. And I'm sure Mike will get us involved in anything and ensure that whatever those new systems are doing are producing adequate and prudent financial information.
Yeah, I'll be giving you an update. That's under number 6, other this evening, status conversion. And yes, we definitely will engage you if we have a need.
Well, great. Steve or Matthew, anybody else have anything else you want to add before we conclude here?
No, just thanks a lot. Appreciate you being here, Doug and Steve, getting the work done quickly and, helping Mike. He's got a lot on his plate with the bond, as you said. And so tomorrow's a big day. So thanks so much.
Absolutely.
Yeah, I appreciate it, guys. Thanks for your hard work.
Oh, absolutely. Well, we want to, Stevie alluded to it earlier, it's a two-way street. I always ask my client what's kind of a good audit. And it's one that both sides come out with the results that they want. That I'm sure we've added some things that Mike will be thinking about next year already. And we'll open up that transparency. I tell everyone at the post audits, and that's why I love having them. The internal control for your next year's audit has already started with today's meeting. And that starts with transparency and us being aware of how we can provide and help you with that service. You obviously will get some sort of evaluation of our service, and please be honest and fair with that. But at the same time, that's when it starts. The more we know, the more we can plan. The less we don't know about, the more it takes a little longer for us to decipher. We obviously have to meet the standards and other things before we can issue our opinion. So with that, congratulations again. Everyone should know who I am and how to contact me, and if not me, obviously my audit manager. So with that, if there's not any other questions, everyone stay safe and have a nice financial committee meeting.
Okay. I just wanted to tell you guys, Steve and Doug, tell you guys thank you. You can leave. I know if you want to sit around and watch the rest of the meeting or participate in the rest of the meeting, you're more than welcome. But, if you want to sign out, that's fine also. We're going to continue forward with the financials from Mike, and you guys stay safe also.
All right. Thanks again.
Thank you, guys. Take care. God bless.
Mike. All right, Mike, you're up.
Okay. So let me. Need to share my screen here. Hold on.
Is it nerve wracking with all this staring at you?
Well, I mean, this isn't what I was looking to share. It's, because I went to the link where the documents are.
Yeah. So Mike, if you just hit share and whatever's in that white box, you click on it, then you can find the document on your browser, which is just the top, where all your windows are open. I got like 30 of them open, right? So that,
Files. But with the link, like where all the sheets are,
yeah. You
is
want me to
showing up in my,
email?
yeah, it's just not showing up here on my screen to share.
Okay. So do you want me to share for you?
If you could do that from the link, the financial.
Okay, let me find it here. So you want me to go into the link and share? I can do that, I think. All right. What do you want first?
Financial statements, the thing with the lion head.
Okay. Okay. The complete financial packet?
Yes.
Okay. All right, so I'm gonna share my screen.
It worked before. I'm not sure why I can't get to it now.
Okay, let me. Okay, can you see it?
Yes. But you have stuff like up above that's showing up, like your files.
It's okay.
There you go.
Can you, all right?
Yep. Mm-hmm.
All right, you want me to?
So first page show, okay, can you make that a little larger? I can't adjust it.
Yeah. And is that too big, Mike? You got it?
No, that should be okay, I guess. So if we, the trend here is continuing with the taxes. We are.
Oh, sorry.
Okay.
Go back. Sorry, Mike.
All right.
Okay, there you go.
So as you know, we estimated, a lower level of collection. So we are exceeding that on the real estate side. We will see final settlements around the third week of March. And that'll give us an indication then of how what the impact, let's say, is on the forecast. Because the forecast was a little bit conservative on tax revenues, and similar to what I've stated in prior months, because we were unsure as to the collection rate. Tax abatement revenues, again, are continuing to exceed, and I would expect that we will exceed the estimated revenues by up to $1 million by end of year. Slightly offset by normal recurring things like tuition and fees that are underrunning due to the pandemic, and rental fees. State foundation, fairly close, and will approximate plan by the end of the year. And slightly overrunning again in rollback and homestead. So I do expect revenues to exceed forecast by the end of the year. On the expenditure side, salaries and wages continue to be slightly better than forecasted. Again, as I've stated before, we are seeing a larger number of retirees, so some of that will be eaten up with severance payments. On the fringe benefit side, I'm currently forecasting about a 800,000 to $1 million underrun in fringe benefits because we are seeing lower expenses in the medical expenditures that due to number of people covered by the plan, and because we had a lower increase than what was originally forecasted. And most other differences are timing at this point. So again, we're doing better than plan at this point. As the months go by, we'll get closer to what reality will be for the year. Next month, we will start the budget process initially to start looking at that for fiscal year 22. And we also, I'll be starting the 5-year forecast that's due in May. So I'll be starting that in March in order to have some preliminary indications as to what it will look like for the April Finance Committee meeting. If you go to next page, is just again that historical summary. Not much of a change there. Again, I expect it to be pretty much on the historical trend line by the end of the year. You can skip the next page. That's just the bank reconciliation. Our investments have not changed much. We really had no items maturing, same coming up in the next month or two. We don't have any maturities until the month of April. So this report basically will not change over the next couple of months. On the, if you go to the next, and we're still getting fairly good yields because we have some longer term investments. On the cash balances, the majority of funds are all current and or due within this fiscal year. 10.7 million in the construction fund, which will pretty much all be used by June. And the FY22 amount is probably for some residuals in July and August payments. So that 15 million will evaporate probably by the August timeframe. Heartland Money Market, we were at 20 basis points. We did have a reset that just occurred on Monday. So given that Star Ohio is now down to 9 basis points, we'll be collecting 14 basis points on the money market through Heartland. So it's advantageous, at least in short-term money, to keep those funds in the money market until they can be invested. Problem is investments are not yielding very much in the short term. Given that now our forecast and the passage of the levy allows me to invest slightly longer term, I might be able to get more yield by going out 3 to 4 years versus the 2 years that I was limited to previously. And the reason the balance is so high at the end of the month was due to tax advances that we've received in February. So that money will eventually be invested in some other vehicle. We still have strong amounts of unrealized gains, about 318,000 in the portfolio. And again, as things get closer to maturity, then those gains evaporate. But if we did need to sell something, we basically can sell most of the portfolio at a gain. Not that we would ever do that unless it was an emergency type situation. And I think that would be it, because the next are just some support schedules relative to payments, check register, and you can, I try to provide this to the board so you can, just scan through what our expenditures are. on a monthly basis to the various firms we deal with, and from top down dollar wise. So we do have a large number of payments in the under $500 range. So that's an area that, at least on the management side of things, trying to reduce the number of payments, which would save time and effort to the extent we can consolidate things or reduce the number of vendors. That would certainly help with efficiencies. Any questions on the financial side of the statements?
On the year-to-date actuals, we anticipate that the other than fringe benefits, that the other line items are going to be pretty much fully expended, correct? By the end of the year?
I would expect that, yes, we would expend most of that, by the end of the year. Yes.
Okay.
Okay, this last chart, we can cover that one quickly. It kind of gives you a historical by month, what the spending patterns are for each of the funds. The top portion is the general fund. So you can see that expenditures for salaries and wages are fairly consistent. They tend to vary whenever, for example, if step increases become initiated or retro payments. In the benefit line, you'll see some spikes when it comes to paying surcharges and other assessments. So those again are fairly consistent. The others tend to vary based upon just the purchasing cycle and what we are needing to expend at any point in time. But again, I'm sorry.
Oh, go ahead and finish your thought.
No, sorry, I was just saying that I do expect the majority of those to equal what the appropriation was, for the year, even though they are underrunning significantly in some areas. Partly that could be due to the COVID money, where we did expend some supply items or purchase services that were applied to the COVID funds we received. So that's one reason why at this point in time we're underrunning.
I did notice when I was looking through the detail reports at the end after the check cut, that a lot of the federal funds have negative fund balances. Is the federal government slow in getting the money out?
No, that's a function of when we apply for funds. Usually we apply for them monthly, but in a couple of cases we did have one issue with the consolidated funds. So a majority of our grants fall under the consolidated area, and because there were questions relative to the budget items or some other questions they had on detail that's included in the explanation of what those funds are going to be used for. Until that is approved, we cannot request the funds. So it held up some of those for a number of months.
I see.
To the best of my knowledge, I believe we have now applied for all the funds, because I recall at the beginning of February completing many of the project cash requests in order to be reimbursed.
Okay.
There were, and on the ESSER money, there was a large negative balance, which we should be, if not received, it should be received in March, because we did finally clear up any questions that they had relative to the budget items. Because we, but if I go back when we first started tracking the ESSER money or putting it into that fund, some of the purchase orders and some of the accounts that were used were not appropriate to what the expenditure actually was. So we had to do work in order to reclassify some of that money. Initially, purchase orders were just being put in to get the PPE and other things we needed. But things that were supplies ended up in the purchase service account. There were some items that went to capital equipment that really belonged as supplies, and we had to clean that up in order to actually get the funds. But that has all been taken care of. Okay, so that would be all for that report. There is, okay, so on the audit report, Mr. Ferguson kind of went through a lot of the legal description of things and, what they look for. What I had sent you was the actual report opinion, and then the 3 items that were identified, which we covered 2 of them. The third was a verbal comment, which would not appear in any report, basically because we had a small shortfall in an appropriation. And that was at the end of the year when I was reconciling all of the accounts in the bond service fund, the 002 fund. I had an error in my spreadsheet because some of those funds, we report as general fund activity. So the non-voted debt, most of which gets reported as general fund expenditure. And I had that on the wrong line. So it caused me to have a shortfall in my report. So when we did final appropriations, I was off in the one fund. I'll need to just make sure that that doesn't happen again this year when we reconcile the bond service fund.
So Mike, is there any of these you want me to open?
So the next item was the acceptance of tax amounts and rates. Levy history.
I think it's called levy history.
Yes. Okay, this doesn't actually show the county auditor estimate, but this is the history of our current levies. So the top is the bond issues, and we set the millage after we had several meetings to discuss with the new bonds that are being issued what the millage should be. As you recall, when we went to the public, I believe it was 4.95 mils that we had on the ballot. We were able to only assess 3.71. So we were able to lower what was assessed to the taxpayers due to the current interest rate environment and the increase in assessed valuation. So the 3.71 is the new issue. We have 2 prior issues still on the books, 1.21, which was the 2018 issue, and the site improvements from 98, which will drop off next year. So that millage will disappear, but that's been incorporated into the 5.66 mils required going forward. So it's not as though we'll see a drop off in that millage. That was already incorporated into the analysis in order to have us lower what it was we needed to ask the public to pay for. The next section is our operating mill levies, which date back to 1968. These are all continuing levies of 74.24. On the real estate side, for residential property, we're collecting less than half that millage. The effective millage is about 48%. So although it's a gross millage of 74.24, we're actually only collecting less than half of that. The permanent improvement, we have 2 levies. The one that was passed back in 2014 is currently yielding 2.16, and the new levy that was just passed in November, which is limited to 30 years. And then inside millage is the 4.4 mils of the 10 that by statute we're allowed to assess without votes of the taxpayer. So the 87.96 mils is what you're being asked to approve, which is consistent with what the county auditor is certifying to us now. They will be coming out next month with the actual rates, the adjusted rates, and then you will be approving estimated resources and expenditures by April 1st. So in the March meeting, we'll review the actual millage and what that will be collecting, and we'll be updating the budgets accordingly.
So this is on Thursday's agenda.
This is, yes, this needs to be certified. The gross millage needs to be certified by March 1st. So that's why that's on this agenda. But next month, there'll be another analysis and rates that will need to be approved by April 1st. And that'll cover all funds, not just general fund and bond fund and permanent improvement.
You ready to go on, Mike?
Yes. So the next was transfers and advances. Actually, don't have any transfers or advances. We do have changes in appropriations. I think, is that part of? That would currently be on the board agenda. I could see if I can try to open that.
I think none of them are general fund, if I recall, correct?
That's correct. It's all other funds, but I have now requested that we're going to add a $2.1 million increase to the bond service fund, and that will cover all of the cost of issuance relative to the bonds and the COPs in the next 2 days. So
the source of that will be general fund going to the bond fund?
No, the source will actually be proceeds from the sale of the bonds. So we are selling a number of bonds at premiums. So we'll be collecting more than the face value. That amount will be deposited in the debt service fund to cover expenditures for the next couple of years relative to interest. And those expenditures are all covered by those proceeds. So there's no money from the general fund used for that purpose. So that is one item that'll change on the board agenda. You'll be getting an update to the chart that shows the increase in appropriations. And then we could, if you want to open up the bond information. Okay, so when we sell bonds, there's a number of decisions that need to be made relative to the sale. If I'd say one of them, I should say, is the call date. So when we sell bonds, typically they have a 10-year call, which means you sell a 20-year bond, but we have the right to pay off that bond, call it, and pay it off early. Typically, that's a 10-year call provision. There are times where you may want to have a 7-year call or potentially a 5-year call. So there was an analysis done to say, if we do a 7-year call, is it worthwhile? Would we save money by doing that when we issue the bonds? And basically the analysis says that no, it would not be beneficial because the incremental cost of having a 7-year call, if you're going to have a shorter call period, investors require a higher interest rate. They want a higher yield. So your interest cost increases, and in this case, it's estimated to be 3.9 million. The savings would occur by paying those bonds off early, and that was estimated to be 3.3 million, and that translates into a $646,000 loss. So the decision was basically to stay with the 10-year call period. And we've had, some discussions about this over the last several weeks, month, with Daphne, and Brian, I think, was unable to attend the call, but just to, make sure that the Finance Committee was aware of some of the decisions we were making. The next chart, if you scroll down, Steve. Okay, this shows the state program, which is a credit enhancement program by the state. And this would have provided a small benefit if we were able to do it, but we had not received in time the actual approval from the state. They kept saying they were working on it, but we never did get it in time for us to kind of go to market for the bonds. And it was decided that, we needed to go to market. So this would have saved us a few dollars on insurance, bond insurance, but again, it did not materialize. The next chart is the bond insurance. I'll talk a little bit later about the downgrade in our rating. So we were downgraded by Moody's from a AA2 to AA3 for the general obligation bonds. And we were downgraded for the COPs from AA3 to A1. So that required us to then go out and do an analysis of bond insurance. And was it worthwhile to pay for insurance to raise our rate back up in order for investors to feel more comfortable with a higher rated bond, which would cost less than interest. So on the bond issue, AGM and BAM were the two companies that bid. They came back with an estimated net benefit initially of $948,000 by AGM, which means that they would charge us $500,000 premium, but we were going to save $1.4 million in interest. So it was beneficial to do it. We did go back and ask them to try to cut their rates a bit, which both companies did. AGM came in with a net benefit of $1,022,000, and that's the firm we selected in order to reduce the cost of the issuance. On the COP side, it was similar, where AGM was less in terms of their estimated benefit was higher. So initially they had a $563,000 savings compared to $489,000 net of premium. We asked the firms to go back and look at their rates to see could they reduce them. BAM did come back and lowered their, so that the benefit increased to $521,000, still less than AGM, but the decision was to use BAM primarily because they had not worked with our legal team before, and there may have been a significant number of legal issues that would have had to been addressed in the documentation, which could have delayed our offering by up to a week or potentially more. And we felt going to market, because we are in such a good place right now to issue the bonds and the COPs, that it was worthwhile to forego those savings in order to get to market. So that was the decision. The other item, just to point of reference, for every 1 basis point related to the COPs issue, it costs $50,000. So even if the market moved 1 basis point against us, it would cover the cost of this because of the delay that could have occurred. So we felt it was more important to get to market. Lastly, preliminary cash flow analysis for the COPs. See if you can make that a little bit bigger, please.
Yeah, let me see here. Not seeing where the, oh, sorry, here it is. There you go.
Okay, so the COPs are, based on the PI levy. So we are going to be bringing in an estimate of $2.4 million a year, kind of that column a little bit right of center, is the estimated PI revenue. The net debt service is fairly consistent at about 2.1 to 2.2 million a year. And we do have some excess, I should say, excess revenue projected at this time. But the problem is we're not certain as to how much is actually going to be collected. We're assuming 97.5% collection rate, and we need to build up a cushion in the debt service relative to the COPS because we never want to be tapping the general fund to make up for any shortfall. So what we initially planned to do is by year, if you look at 2029, we would effectively have 2.2 million in reserve, which would be 1 year of debt payment. We don't necessarily need to get that high, getting the 60% or so after 5 years might be adequate to 1.3 million, which would mean that the excess revenue on the PI levy could then be used actually for PI expenditures. Once we get to a certain level, that's comfortable for the district to make sure that we have the debt service covered and not ever need to tap into the general fund. So again, this is the analysis for the COPS. This allowed us to increase the offering even at this level from the 44.3 million up to 48 million. So we're able to gain another 3.5 million or so in proceeds to be used towards the project. And as you recall, the board authorized up to 50 million.
And isn't there an ORC that we can't have too much in that reserve? There's a maximum.
I'm not sure if ORC, I'd have to actually check on that, but the county auditor
Okay.
would have an issue if, for example, on our, this is a PI levy, so it's not a bond levy or bond issue. If the bond service fund gets too large relative to your anticipated payments, the auditor can reduce your millage. So he has that authority, or she would have that authority to lower your millage if it becomes excessive. I don't believe in this case that applies because we can use those excess funds, for PI purposes.
I thought there was some constraint. I couldn't remember what it was.
Okay. So that covers the, some of the items that, are relative to the sale and things leading up to sale that needed to be considered. Steve, if you can go back to the list. If you look at ratings chart at the bottom. I know it's a fairly simple thing, but I tend to get confused sometimes between Moody's ratings and S&P, and we don't use Fitch. But so our bonds, we were at 2 under Moody's, dropped to AA3. That's still considered high quality issuance. Good quality A1, which is the COPS, and the COPS are always carry a rating, usually 1 level below your bonds. And you can see where that translates to in the S&P scale. The bond insurance effectively raised our rating back up to, on the S&P scale, AA, which translates back to our AA2. So we don't lose anything in terms of the interest rates we're paying. We did have to expend money to get back there, on bond insurance. So the net effect, the drop in rating cost us approximately 10 basis points or 0.1%. On interest rates, the bond insurance reduced that to about 5 basis points.
So Mike, I think without doing the insurance, it would have been, I think you and I talked before about 1.5 million and it ended up only being 500,000. Is that right?
I think it was $1 million savings on the bonds and I forget from the chart exactly what it showed for the on the comps.
Okay.
I'd have to go back.
Yeah.
But yeah, we definitely in the, in excess of $1 million, about 1.4 to 1.5 million
Mhm.
is by doing the insurance.
I have to say, when reading the Moody's credit opinion, it's one thing that we understand we have to take on a lot of debt because we're doing 3 major projects that have, and inspire 3 other smaller projects. But to have an effect come from pension liability that we have no control over is a little bit frustrating to me.
Yeah.
It is true. And we argued that point.
We did.
That point, Jill argued that point. I argued that point. I argue that, well, the county auditor is going to assess the rate necessary in order to collect the proceeds to pay the bonds by statute. But, as I tried to explain today, although I don't agree with their opinion, there is some logic in that. For example, with the pensions, we have no control over those benefits. We are assessed, but they do see it as a potential risk because at some point, due to the deficits in the pension plans, either the employee, the employer, cost is going to increase and/or benefits will need to be reduced. So, or a combination. So they look at it as a potential risk to the general fund. And
The point we tried to make was that in Ohio, though, you can, the legislature can pass legislation that requires districts and employees to pay more. And some of the most underfunded pension systems in the country, they don't have the ability.
Have stability, you can bankrupt, a school, a city, or whatever else just with the pension.
well, it would bankrupt most every school system if that pension liability was actually something we needed to pay for. There's nothing we can do other than, petition the legislature. We make our payments and we make them on time. And we are up to date on all required payments we make. But the problem is, that it's looming out there as a potential issue down the road, and to get addressed, then some action will need to be taken, which could be detrimental to our finances if they say we need to kick in a higher percentage towards pension cost. And that's the only potential rationale that I can see as to why they would consider that as a negative.
Having that disappointment, we still are in the high quality grade level for the majority of our debt, and that the community should be commended for, approving the levies and the bond issue and moving forward with it. So
absolutely. So
Absolutely.
we've had a number of calls relative to the market, and as I mentioned, tomorrow, based on our timeline that we developed a few months ago, was our sale date for the bonds. We originally were going to delay the COPs for an additional week, but given what's happening in the market right now, the decision was to accelerate that, and we will sell the COPs on Thursday, assuming a successful bond offering tomorrow. All indications are that the market is strong, that some of the comments are that most issues are being subscribed, meaning we're going to have more bids for the bonds than we actually have to sell. The demand is strong. They're seeing an increase in dollars moving into bond funds and the purchase of bonds because of volatility in the stock market. And that's been 20 billion year to date increase into bonds. There's no real significant competition this week, and there's very little Ohio paper that's out there for sale. So we have a lot of things going for us this week. We're one of the only games in town for the state of Ohio, and not having significant competition. There's a number of investors that are lining up to purchase these securities. On the negative side today, there was a huge increase in taxable rates. The 10-year government bond increased 8 to 10 basis points today. We've been lucky in that the tax exempt rates have not moved accordingly, but there was a 2%, I'm sorry, not 2%, 2 basis point increase in the MMD, which is the municipal market index today. So it's appearing that, you know, we're entering the market at the right time before we might see some large increases in rates. Inflation is, you know, on the horizon potentially, especially due to government spending. So again, I think we're in good shape, and tomorrow should yield some very good results. We had a call last Friday where our municipal advisors and the underwriters met to look at the spreads that were being offered and what our rates were and what we were expecting to sell the bonds at. Those, you know, were tightened a bit. They allowed us to sell some additional serial bonds, and serial bonds are ones that are paid off. Principal is paid every year in addition to interest, as opposed to term bonds that are paid at the end, where you only collect interest up until the date of maturity. Those tend to carry a slightly higher cost. So again, right now we are, I think, in very good position. And I'm looking forward to tomorrow to see how this plays out.
I know you guys, I've been on a lot of calls with you, but I know you've been on many more. And so thanks for all the work on all of the very small details related to this process.
One thing we can also cover here is that cost of issuance. This is the 2.1 million. I'm asking you to approve an increase in appropriations. So it just details out the bond council, municipal advisor, rating agency. 2.1 million in total cost. The takedown is the fee that we pay to the underwriters, and, you know, coming in at a fairly favorable amount of 2.5 per bond. That could have been 2.75 or 3. So I think we did get a very good rate on the cost there.
Want to go down here, Mike, or?
So yeah, that's just the next page is the any questions relative to the bond issue or COPS?
Okay. Hey, I was just looking at that actually satisfies other, or are we moving into?
Oh, yes,
something else?
and on other. Okay, so Daphne mentioned the redesign software. So we last week on Monday evening, we basically froze the systems from any further input. Tuesday, and we also completed payroll and everything that needed to be done prior to extraction of data. Tuesday afternoon, data was extracted. Wednesday morning, we started to reconcile any differences between the data in the system versus the data in the new system. There were no differences in actuals, but there were numerous differences, few on the payroll side. There were only a handful of things identified as disconnects. But on the USAS side for the accounting, we had numerous differences and encumbrances, which current and future that were in our system, which when they translated over to the new, created numerous disconnects. And my team spent an extraordinary number of hours trying to identify those differences and disconnects. Friday afternoon, we were very close in terms of identifying them. And this is not something that's unexpected. I think my frustration is that this is a known issue with data conversion, and I would have thought they would have a mechanized way to identify them. We basically had to go line by line through thousands of lines of data to find where those differences in the encumbrances occurred. And it took several days. So that although Friday afternoon we were potentially ready to sign off and say we were going live, we did take the weekend, and Michelle today finalized the analysis so that we met about 4 o'clock this afternoon with Meta, and we agreed that we were in sync. The variances cannot be fixed. It's nothing that we can fix on our side. And these variances, like I said, they're known. They're also known audit issues, and the auditors are aware that these disconnects occur when you convert data. So they will carry with us till the end of the fiscal year, after which time they drop off and we will be in sync. So the key was to identify every difference that occurred so that it can be addressed from an audit perspective. And so we are now live with the new system data as of this evening.
I got a question. When all this conversion and stuff like that, was it our people or Meta who was responsible for the mapping of between the two systems? Because I know, like most places, when we're changing software or changing systems, the company that's providing us the new system does like the mapping, and all we do is the testing, because we do regression testing and things like that to make sure that how they mapped it is going to come across correctly. So I'm not sure, you were saying that our people are the ones that was responsible for the mapping of the new software?
There should have been, it should be a one-to-one mapping, because all the codes that exist in the old system also exist in the new system. So all the account codes and the fund codes and all of that are the same. So the data that was in there should have ported over and been identical. But they have some issues, and I'm not sure where they occur. And it's on the encumbrances, like the purchase orders that are out there and the balances on those purchase orders. For some reason, the new software looks at them differently, and it causes errors, or I don't say errors, but disconnects between what was in the old system and what might be in the new. So you may have a purchase order that is for $1,000 in the old system, and it may have had a couple of payments against it. So now it's, say, $500 open. When it goes to the new system, for whatever reason, it may show up as $400 or $800. We don't understand why that occurs, and it's only really within the encumbrances, not the actual data, so not the actual balances.
Yeah, that's what I was just saying, as far as, because if you have done like, and so like your people are the ones who's going to be the ones cleaning this up going forward, or to make sure everything's good. Because like I said, normally you would do like a sample, and then you would do regression testing on it to see that things are coming across where the errors are before you push the whole file across. Because I say, if you're, and I'm not sure if I understood you said that after a certain period of time, it's going to correct itself.
What will happen is there won't actually be any corrections, because we can't make any corrections. Only Meta, if they were able to, could actually correct data. So these variances, would be just carried month to month. And at the end of the fiscal year, when they all the books and the account detail, when we open up next fiscal year, those variances will no longer exist. That's the way it's been explained.
So if there's open.
Seven.
If there's
We're in
open,
waves. I'm sorry.
no, I'm saying if there's open encumbrances at the end of the fiscal, that will zero out, or will that carry, or will there be an issue with that?
We usually do close out many of the encumbrances at year end, but there are some that do carry over. So any ones that do carry over, we'd need to make sure that those balances are correct. But they're in wave 7. They've done this, numerous times over the last several years, and they know about these exceptions. They've worked with the auditors, and the auditors know about the exceptions. So it's not something that would come back to us to say, hey, you have a disconnect here in what was reported as encumbrances previously and what it is today. So like I said, we have to do it. We have to do the reconciliation to identify all the variances, which, as I said, my frustration was that they don't have a mechanized way to do that.
Okay.
So now I know why, Mike, they were talking about looking for a needle in a haystack.
Mm-hmm.
That's what it was like for them last week, right? A lot
Yes.
of hard work. Thank you to them and your team for doing that. They were very anxious. Glad they were able to solve it.
Okay.
Yeah, hats off to your team.
Yeah, I think they did a great job.
Yeah.
And Michelle, kind of coordinated that since I was tied up with bond stuff continuously. So yes, my hat's off to Michelle for leading that effort and for all the team for pitching in, because they all jumped in to help each other.
Right.
Thank God the payroll side had minimal number of disconnects that were fairly quickly identified. So we're ready to go live. We actually went live with payroll this morning, and we're going live with USAS accounting side this evening. So purchase orders or requisitions are now open again.
We've been saving money because I haven't approved any requisitions in about a week.
Yes, that's one way to make sure we're under budget.
Okay.
All right.
Oh, I'm sorry. Go ahead, Steve.
Oh, no, sorry, Brian. I'm good. Anything else? Mike or Brian?
No,
Sorry. Go ahead, Brian.
No, I was just saying, is there any other comments, questions, concerns? Okay, well, it's 8:07, and I guess we will adjourn. Everybody stay safe.
Have a good night, everybody. See
Stay
you guys.
safe and warm.
Good night.
Yeah.
Night.
Good night.
Thank you.
See you.
Okay. Thanks, Steve, for doing that.
Yeah. Good job, Mike. Thanks.
Okay.
All right. Well, we won't have our meeting tomorrow because we'll be interviewing.
No, we'll be in those meetings. I plan to, I've got meetings straight through to about 1 o'clock.
Okay.
I think I'm just going to do that at home, and then I'm
Okay.
going to come in for the insurance committee
Okay.
meeting.
All right. Have a good night, Mike. Thanks.
Good night.
See you.